Okay, all right. Hello, everyone. Thank you so much for sparing your time to join my webinar tonight. And I'm Nicholas, and I'll be the MC and speaker for today's webinar. So, before I carry on, I will drop a poll here just to make sure if everyone can see my screen and can hear me. Hold on. Okay, there'll be a button for you to select whether or not you can hear me loud and clear. Okay, I'll leave another 5 seconds. So far, yep, there's someone voting. Okay, I assume, yeah, the mostly a yes and okay. Then I'll begin the presentation now. So let me just end the poll first. All right, so okay, now I'll start the presentation. So before I start, I would like to share a short disclaimer here. This presentation has not been reviewed by the Securities Commission of Malaysia, and the information provided are only for educational purposes. We do not ask you to buy or sell or invest in any products. However, if you wish to invest, please seek advice from a licensed financial advisor. Okay, let me start. A little backstory of Philip Capital. We are incorporated on 7th of October 1995. We are a wholly owned subsidiary of Philip Capital Holdings Sdn Bhd. Philip Capital is formerly known as Philip Futures because back then we only provided derivative products such as futures contract and contract for difference to our client. Until recently, we got our stock license. We now also offer stocks. We are a trading participant of Bursa Malaysia Derivative Berhad, and we are also a participating organization of Bursa Malaysia Securities Berhad. And we also are a holder of Capital Market Services license. Our headquarters is located in Kuala Lumpur, and we have a total 11 investor centers nationwide. So with plenty of investor centers nationwide, you can drop by in any branch if there's any inquiry. Throughout the years, we also won multiple excellence awards from Bursa Malaysia. In recent years, which was the year 2023, we are considered one of the best overall derivatives trading participant, and during that year, we also consider one of the best retail derivative trading participant. We have offices not only located in Malaysia, but also in 15 other countries, totaling 16 locations worldwide. In Western countries, we have offices in the US, UK, France, and many more. And in Asia, we have offices located in Singapore, Japan, Malaysia, of course, China, and several other countries. Every country mentioned here in this slide has an established have an established office, sorry. All right, with offices located at different countries means we have a wide global coverage. We have access to product from exchanges like the CME Group, Chicago Board of Trade, or if you're interested in the Asia market, such as Singapore Exchange, known as SGX, we also offer their products. If you wish to trade any of the product from these exchanges in the slide here, you can trade them through us. Why Philip Capital is your one-stop solution for your trading? As a multi-asset broker, we offer a wide range of products, including futures, stocks, and contract for difference. In short, contract for difference is CFDs. If you are interested in agriculture futures, you can trade the crude palm oil futures known as SCPO with us. Or if you prefer metal futures, we have gold futures and silver futures. For stocks, we offer local shares to foreign shares. Foreign shares including shares from the US, Hong Kong, Singapore, and Australia. if you are interested in investing in shares, let's say the US shares, you can invest through Philip Capital. For CFD, we offer Bursa shares, New York Stock Exchange shares, Nasdaq shares, US index, and last but not least, commodity CFDs. We are your broker of choice not only because we are an award-winning multi-asset broker, but because of the quality services that we provided to our clients, such as 24-hour booking and execution support. We also provide advisory services and update our clients with the latest market news. We also have a wide array of products, as mentioned in the previous slide. And we also offer our own trading platform, which does not require any platform fees. You can learn with Philip Capital by having a one-to-one coaching session with us or attend our free seminars and webinars. For the one-to-one coaching, we will cover introduction to futures, CFD, and stock trading, and we will provide the product knowledge on the product that you are interested in. We will also coach you on our platform and let you understand our platform
Hi guys, one moment. I think the speaker disconnected. Let me try to get him back on real quick. Please hold on for just a moment. Yeah, the speaker is coming back shortly. He's rejoining right now. Yeah, just a moment, everyone. I'm trying to see what technical issue we're facing right now. But the speaker is having obviously more content down the line. It's just that he currently has been disconnected. Meanwhile, do know that we actually have a Q&A section at the end of the presentation. So, do stick around for that. Yeah, I'm still fixing it at the moment. Meanwhile, if you have any questions you'd like to address, in terms of, trading or investing, we could do like a pop-up question and answer session. And any one of you have any questions regarding, trading or investing, you could let me know right here. There should be a question tab at the top right-hand corner. Are you guys interested, like, in any stocks at the moment? Any anything that catches your eyes, or what industries you guys are interested in investing in, you could let me know as well. I can try to give my insights on that while we wait for the main speaker to come back to the event itself. But meanwhile, yeah, the market's a bit, iffy. It's been a bit iffy for a bit. Definitely with all this Trump tariff and all of those things, it's a bit sketchy. All the indices has been, you know, dumping as of now. Right, I think our speaker is back. Let me make him the host for a bit. One moment. Yeah, but for sure, as of recent, the market's been a bit volatile. Trump has been crazy with the tariffs. Trump has been making a lot of bold comments and wild claims that's actually kind of moved the markets like a bit sideways and a bit bearish as of now. But yeah, I think our speaker is back, so I think I'll pass the floor to him. One moment.
All right. Hello, hello.
Yeah, yeah, we can hear you. Go ahead, Nick.
All right. Nice, nice, nice. Sorry, let me start from this slide again. So sorry for the technical issues. All right. So sorry about that. All right. So for to continue for the one-to-one coaching, we will mainly cover introduction to futures, CFD, and stock trading, and we will provide the product knowledge on the product that you are interested in. We will also coach you on our platform and let you understand our platform charting system. So not only free coaching, seminars, and webinars, we also provide weekly market calls. Our weekly market calls is always hosted on every Monday. However, do take note that for market views and updates, which will be hosted by our Philips Security Research Team, we will start at 11 a.m. And for our live counter technical analyst, will start at 8 p.m., which will be hosted by Zain Ao, by our technical analysis. So this is the QR code for the weekly market calls and upcoming seminars and webinars. Once you scan the QR code, it will link you to our website, and from there you can register to the upcoming events that you are interested in. Okay, I'll pause a few seconds here for you to take a picture. All right. So next is this is our online account opening QR. So if you are interested in opening an account with us, you can do so by scanning this QR code or take a picture of this to scan it later and sign up an account with us after this webinar. All right. Next, I would like to share our trading platform that our client use to trade or invest. We have different trading platform for our different products. So let's start with the first one, Philip Nova. Philip Nova is our trading platform for futures. You can trade local and foreign futures product through Philip Nova. The platform is equipped with over 90 technical indicators and market depth trading tool for your market analysis. You can scan the QR code here to request a demo account. And you can install this on your mobile devices so you can trade anywhere and anytime when the market is open. One of the best thing about our Philip Nova is our Philip Nova chart. The live chart is powered by TradingView. So basically, we get the TradingView charting system and put it on our Philip Nova platform to give you the same trading experience like trading on TradingView. Poems Global is our stock trading platform and is available for installation on your mobile devices, allowing you to trade anywhere at your convenience with just a few taps on your phone. You can trade local stocks from Bursa Malaysia, or if you are interested in investing in foreign shares, let's say the Tesla shares from the US, you can do that as well. Through Poems Global, you can access the market from Malaysia, US, Singapore, Hong Kong, and Australia. Additionally, the platform is equipped with the advanced charting indicators and powerful stock analytics to help you better analyze the market and make informed trading decisions. Okay, this is Philip CFD Trader. It's a trading platform for our CFD traders. It has a user-friendly interface with live charting features. You can set price alert and you can use advanced order type for this platform. Okay, coming to our promotion. We have a few ongoing promotion right now. The first one would be our promotion for the US stock, where you can trade US stock with low commission rate as low as 0.02% or 1.99 USD. There will be no platform fee charges, and we will also provide you a free US live market data. It is valid till 31st of March 2025. You can scan the QR code here to learn more. To pay up with our US stock promotion, we now also have an amazing giveaway prizes till 31st of March 2025. Just follow our social media pages such as Facebook, TikTok, and Instagram to stand a chance to win Apple products that's worth up to 10,000 ringgit. Terms and conditions apply. Please scan the QR code to learn more. And you can scan the QR code to gain entries for the giveaway. Coming up next is our promotion for futures product. Currently now till 15th of April, you can trade COMEX 1 ounce gold futures at only 0.99 USD. So gold traders, don't miss out this opportunity. Can scan here for more information. Okay, next is our promotion for Bursa Malaysia derivative futures product. From now till 30th of April 2025, you can trade and stand a chance to win an iPhone 16 and 350 ringgit cash reward. So do scan the QR code here to learn more about this promotion. And last but not least, we're having a marketing representative program where marketing representative can earn up to 100 ringgit touch and go reward by sharing our US stock promotion with your family and friends. Refer them to open a stock account with free US live market data and get RM100 extra for every 10 activated account plus commission. Do scan the QR code here to learn more. Okay, just bear with me a little longer. Since I haven't properly introduced myself yet, let me give you a brief introduction. So my name is Nicholas and I'm a dealer and marketing executive at Philip Capital. I graduated from Monash University, Malaysia, where I majored in finance and minored in economics and international business management. My interest in the financial market began during the COVID-19 when the lockdown occurs. That's when I started observing how and why the market moved in certain directions. Understanding market trends, price movement, and the factors influencing them fascinated me, which eventually led me to pursue a career in this field. All right, that's enough of me, and let's begin the presentation now. Okay, so what are stocks? I believe many of us here have come across the word stocks before, and some of you may have even heard your friends or family member discuss the stocks, what kind of stocks in the in your guys' conversation. Perhaps you even heard them discuss which stocks are going up and which ones are performing poorly right now. So, for example, during the COVID-19 pandemic, one of the most common topic in my household was top growth stocks and pharmaceutical company stocks like Pfizer, because during that time their prices skyrocketed due to high demand. But that's enough for my past. But yeah, now coming to the main question. So, what exactly are stocks, and why do people whom we call investor and traders invest in and trade stocks? So, let's dive into it and explore the purpose and significance of stocks in the financial market. So, a stock is essentially a piece of ownership in a company. You can think of a company like a whole pie, and each slice represents a stock. So when you own a stock, you own a small portion of the company, which give you the right to its profit and asset. In simple terms, owning a stock means holding a percentage of the company, and in return for investing in the company stock, we expect potential return such as dividend, a share of the company's profit, or capital appreciation known as an increase in stock value over time. And don't worry, I'll explain this concept in more detail later. Alright, now we got a simple idea on what a stock is. Coming to this question, why do some corporations offer their stocks to the market? It's pretty simple, honestly. It's mainly to raise fund. And you will ask me, why would they need to raise fund for, since their business is already making money? So there are two things that corporation raise fund by offering stocks. The first one is business expansion, where the corporation decided to expand their business to generate even more revenue. And the second one is research and development to invent new product. So through raising enough fund, corporation can further expand their business or to conduct research and development to create a new product to offer consumers like us. You can imagine that you own a corporation called Delicious Baking Bahat, which specializes in distributing pastry such as bread, pies, and cakes to the market. And one day you decided to expand your business or develop a new type of pastry to meet market demand. However, you realized that the company lacked of sufficient funding to pursue this goal. To raise necessary capital, you decided to sell a portion of your company stock, allowing investors to become shareholders and support the company growth so that your company can successfully expand the business and enough fund to develop a new product. Okay, why do people invest in stock then? Why do your uncle, auntie, or friends invest in stocks? Like I said earlier, we all expect some benefit from buying and owning a stocks. By buying a stock, owner of the stock will expect benefits such as capital appreciation and dividends. Let's start with capital appreciation first. What is capital appreciation? Capital appreciation is the increase in the market value of an investment exceeds its original purchase price or cost basis. But how does it work? It's basically buy and hold on potential growth stock that may increase in value over time. Let me give you an example to illustrate capital appreciation. So let's say imagine you own a stock in 2024 at a price of $10, and over time its value has increased. Let's say by 2025 it reaches $20. This means that the stock has appreciated by $10, reflecting a gain from $10 to $20. This simple example demonstrates how capital appreciation works. What it means is when asset value increases over time, generating a profit for the investor. I mentioned about dividend just now. So what is dividend? Dividend is a percentage of a company earnings paid to shareholders. You can think dividend as the shareholder share of the company's profit. And the dividend payout is usually depends on the company's dividend policies. Some companies they offer quarterly payout dividends, and some they offer annually, some may have also offer semi-annually. And the amount distributed is based on the company's most recent earnings. There are two types of stocks that I'll be covering in this presentation. One is common stock and the other one is preferred stock. Both stocks represents a fractional ownership in the company, and investors and traders purchase them to try to make a profit from the future successes of the company. However, both stocks are different in features. If you own a common stock, you have voting rights in the company. However, if you own a preferred stock, there are no voting rights for preferred stock owner. In terms of dividend, both stock receive dividend. However, for common stock, you receive variable dividend, whereas preferred stock, you receive fixed dividend. Let me explain a little bit more about the dividends I mentioned earlier. So, a variable dividend is a dividend that fluctuates based on a company's financial performance or dividend policy. Sometimes it can increase, decrease, or even be skipped by companies. Variable dividends are unpredictable because the amount depends on the company's performance. However, compared to a fixed dividend is a predetermined amount paid at regular intervals. What I mean paid at regular intervals here means is the company will consistently pay the fixed dividend at a specific time period. And a fixed dividend does not change based on the company's financial performance. This means that during both good and bad times, the company will still pay the dividend. It is predictable and investor can expect a steady income. Now you ask me, which type of stocks carry more risk? Is it common stock or preferred stock? Let's say in the event of bankrupt, the companies go bankrupt, it will sell off all of its assets to generate fund. This fund then will be distributed to the stockholders, preferred stockholders, and common stockholders. However, who will get paid first? When a company liquidates its asset, the available funds are first used to pay the preferred stockholder, and then the remaining amount is distributed to the common stockholders. As a result, common stockholders face higher risk because they are last in line to receive payment and may not recover their investment if the funds are insufficient. Let's come to the next topic. How do people invest in stocks? What do those investors and traders do to pick the right stock to invest? And I'll be sharing two basic ways on how to pick the right stocks to invest. The first one is fundamental analysis. So how do you use fundamental analysis in stock picking? Let's get a brief idea on what is fundamental analysis. Fundamental analysis is for examining a company's real value. Most investors and traders will turn to companies' financial statement from companies' annual or quarterly report as a key resources. These documents are often provide you a detailed picture of the company's financial health, whether the company is doing well or doing poorly, and the operational efficiency of the company. A company's financial well-being is very important to its stock performance as it influences investor trust, market valuation, and long-term growth prospect. Okay, now let us go through a few major financial statement report. Sorry. The first one is statement of financial position. There's another term for it. It's called the balance sheet, and it will usually list the asset, liabilities, and equities of the company. It provides an overview of the financial condition of a company, and the debt at the tops will tell you when the figure is being recorded. And now let's look at some examples. This is how a statement of financial position look like. Let's dive into a little more detail. We are now looking at the asset side. So asset has split into two types of asset, non-current asset and current asset. Non-current asset are the company's long-term investment and cannot be converted into cash easily within a year. Current asset, on the other hand, are short-term asset as they generally are convertible to cash within a year. Okay, next is the equity and liability side. Let's start with equity first. Equity refers to as shareholders' equity and represents the amount of money that would be returned to shareholders in the event of liquidation. Non-current liabilities are long-term debts that are beyond 12 months, whereas current liabilities are short-term debt that expects to pay within 12 months. Let's go to the next financial statement. The next one I'll be sharing is statement of profit or loss and other comprehensive income. So this statement is a financial report that summarizes the company financial performance over a reporting period. It's a primary source of information for investor to assess an entity's financial position performance. And this is how it looked like. And here I will pay attention mostly at the overall profit after tax because it gave me a general idea whether the company is making money or losing money. By using these financial statement values, you can compute financial ratio for your stock picking. And I'll be sharing two of my favorite ratios, which are return on equity and debt to equity ratio. Let's start with the first one, which is return on equity. The formula goes by net income divided by shareholders' equity. What is it actually? What is return on equity? Or in short, we call it ROE. It's a ratio that provides investor with insight into how efficiently a company handling the money that the shareholders have contributed to it. It gives a gauge of the company's profitability. Once you compute the ROE value, you can compare it with previous year or historical data. Let's go through some calculation examples now to better understand the performance of the company. And I'll use the group financial data from Ibraco Bahad because I want to assess how well is it doing. As I mentioned earlier, return on equity is net income divided by shareholders' equity. We can find the net income in the statement of profit or loss and the shareholders' equity under total equity in the statement of financial position. So for the year 2023, using the reported figures, which is about 45 million in net income, divide by 479 million in total equity. Once you key this in the calculator, it gives us a ratio of 9.46% for the year 2023. Now, as I mentioned earlier, it's important to compare it with previous year's data to identify trend. If we put the value of 2022 into the calculator, we'll get an ROE of 6.88%. This comparison shows that the company has used its equity more efficiently in 2023, generating higher profits relative to equity compared to the year 2022, which indicates improved profitability and financial performance. All right, the next ratio I'll be sharing is debt to equity ratio, or in short, DE ratio. The formula goes by total debt divided by total shareholders' equity. DE ratio is used to evaluate a company's financial leverage. In short, DE ratio measures whether the company operation is financed by debt rather than its own resources. Generally, if a company have a high DE ratio, it means the company is heavily financed with debt and may pose higher investment risk. Once you compute the DE ratio, you also can compare it with the previous year DE ratio of the company. And here's an example. Okay, just like what we did on return on equity, we use the numbers from the group financial report for the year 2023. And all these values can be found in the financial statement. To recap the formula, the DE ratio is total debt divided by shareholders' equity. In this case, total debt refers to net debt, which is approximately 363 million, and we divide this by total equity, which is about 487 million. By entering these numbers into a calculator, we get a DE ratio of 0.74 for the year 2023. Comparing this to the DE ratio in the year 22, which I calculated earlier, 0.57, we can see that the company steadily increased its reliance on debt to finance its business. Although both debt and equity increased, the company debt grew proportionally more than its equity, indicating a greater reliance on debt financing in the year 2023 compared to the year 2022. However, despite this increase, I would still consider to invest in the company stocks as it's not excessively leveraged, and more importantly, its RE ratio that we calculated earlier has shown a significant increase, indicating improved profitability and efficiency. Another fundamental way is by analyzing company's prospectus. So what is a company's prospectus? It's actually a written document that provides the risk and information such as the company's investment and the company being invested in. By knowing the amount and the type of risk involved, investor can make important decisions whether to invest in the company's stock or not. Here are some examples of a company's prospectus where you can pay attention at. Firstly is competitive strength. So you can review their competitive strength to gain insight into their key advantages within the industry they operate in. This section highlights factors such as market positioning, product innovation, cost efficiency, brand reputation, and strategic partnership. Understanding these strengths can help investors assess how well the company differentiates itself from competitors and its potential for long-term success. Next, you can have a look at their futures plan and strategy here. These ones are important as well as they provide investors and the readers with a clear understanding of the company's long-term goals and the approaches it will take to achieve them. This section mostly outlines key initiatives such as business expansion, revenue growth strategies, technological advancement, and operational improvement. By reviewing this part, investors can assess the company's vision, potential for growth, and how it plans to navigate challenges in the future. Last but not least, the risk factor section. This one. You can pay attention to this as well because it outlines the potential risks you may face when investing in the company stock. This part provides detailed information about various risks such as market volatility, financial instability, regulatory changes by the government, and industry-specific challenges. By reviewing this section, investors can better understand the uncertainties involved and make informed investment decisions. Alright, now I will go to the next part, which is technical analysis. And in this part, I will share how you use technical analysis to do your stock picking. So what is technical analysis first? Technical analysis is a method used to examine and predict price movement in the financial market by analyzing historical data, pattern, and various market statistics, helping traders and investors to make informed decisions based on price trends and trading volume. There are many strategies out there within technical analysis, including support and resistance levels, chart pattern analysis, and smart money concept, and many more, each playing a crucial role in identifying potential market movement. However, in this session, I'll be specifically focusing on chart pattern analysis, where we will explore how different patterns can indicate potential trend continuation or reversal, allowing traders to anticipate market behavior more effectively. Okay, this is a chart pattern cheat sheet. As you can see here, there are many type of pattern here, but don't worry, I'll be sharing the ones that I commonly found in the chart. So let us understand what is chart pattern analysis first. A chart pattern is a recognizable configuration formed using trend lines or curve that indicates the transition between rising and falling trends. And in stock chart pattern analysis, this pattern are categorized into two main types. One is continuation pattern, which suggests that existing trend is likely to continue. The other one is reversal pattern, which signal a potential change in trend direction. And I'll be sharing two examples for continuation and reversal chart pattern to help you understand how they work. Let's start with the continuation pattern first, the flag. This is a bullish flag pattern. It consists of two key components, the flagpole and the flag itself. This pattern typically appears in the bullish market trend. The flagpole represents a sharp upward price movement, while the flag signifies a brief consolidation phase where the price retests the trend lines before eventually breaking out and continuing higher. Here is the bullish flag example, and I'll leave the pattern on top of the chart just in case anyone forgets about it, how it looks like. Alright, let's jump into the chart example now. As you can see here, price had been moving up before entering a consolidation phase, which means that the price is in an uptrend now. When we notice this, we can start plotting the trend lines on the chart, just like what I did here. And now, here is the flagpole, and here's the flag. We just have to wait for the price to break above the flag now. For better confirmation that price will continue to push higher, we want to see a bullish green candle close above the flag. And let's see this example, whether or not it's a valid pattern. Okay, as you can see here in this scenario, price had closed a bullish green candle above the flag, the one circled in red. And you can see that once it closed bullish green, the price had continued to trend higher. Let's say if you did if it did not close with a bullish green candle, it means that the flag pattern is not valid, and you have to wait for a bullish green candle to close for higher probability that price will continue to trend higher. Now, this is the bearish flag pattern. This pattern also consists of two key components similar to the bullish flag pattern. It's just the opposite of the bullish flag pattern. It consists of flagpole and the flag itself. And this pattern usually appears in the bearish market trend. The flagpole represents a sharp downward movement, while the flag signifies a brief consolidation phase where the price retains the trend line before breaking out and continuing lower. Here is the bearish flag example. Same as just now, I'll leave the pattern on top for your reference. Alright, we can see the chart now. Price had been moving down before entering a consolidation phase. When we notice this, we can start plotting the lines on the chart. Here's the flagpole and there's the flag. Now we just have to wait for price to break below the flag. As I mentioned earlier, we have to wait for confirmation, right? What's the confirmation here for bearish example? We will want to see a bearish red candle close below the flag. And let's see what happens next. Okay, in this scenario, price had closed a bearish red candle below the flag here, the one circled in red. And you can see that price had continued to trend lower. Alright, now let's move on to reversal chart pattern. I'll be sharing both bullish and bearish reversal pattern, starting with the bearish head and shoulder first. It's a reversal pattern. So if you spot this pattern in an uptrend, it's likely to signal that the bullish trend is coming to an end and may reverse into a downtrend. Here how's the pattern form. The price is in an uptrend first, and then it moves up and down, creating the left shoulder, and then forward is the head, and then the right shoulder. Once the head and the shoulders appear, they form the neckline here. So now, if the price breaks and closes below the neckline, it indicates a higher probability that a trend reversal is about to happen. Let's jump into the example. As you can see here, price is in an uptrend, and then it start moving up and down, creating the left shoulder, the head, and the right shoulder. At this point, we can plot the pattern to make it more visible. Here is the neckline, and now we wait to see whether price will close below it. For a higher probability of a reversal, we want to see a bearish red candle close below the neckline. And let's see if this setup plays out successfully. In this scenario, price had closed bearish red below the neckline, the one circled here in red, indicating that price had is most likely to reverse from bullish to bearish trend. Last but not least, I'll be sharing the bullish head and shoulder pattern. Another name for this is inverted head and shoulder. And if you spot this pattern in a downtrend, it's likely to signal that the bearish trend is coming to an end and may reverse into the uptrend. Here how's the pattern form. Price is in a downtrend first, and it moved up and down, creating a left shoulder, followed by the head and the right shoulder. Once the head and shoulders have been formed, they form the neckline. If the price breaks and closes above the neckline, it indicates a higher probability that of a trend reversal to the upside is about to happen. It's the opposite of the bearish reversal head and shoulder. Alright, let's look at the example. You can see that price is in the downtrend now here, and then it start moving up and down here, creating the left shoulder, the right shoulder, and the head. At this point, we can plot the pattern to make it more visible. Here's the neckline, and now we just have to wait whether price will close above it. For a higher probability of a reversal, in this case, we want to see a bullish green candle close above the neckline. Let's see what happens next. In this scenario, price had closed bullish green above the neckline. At here, the one circle in red, and indicating that price will most likely to reverse from bearish to the bullish trend. However, in this scenario, you can see that price retests back the neckline, the red candlestick here. As long as price does not close below back the neckline again, the pattern is still valid, and you can wait for another green candle to form for better confirmation. Like example here. Okay, I think this is the end of the presentation. Here are the summary. So we had went through why do people invest in stocks. It's because firstly, capital appreciation. The other one is dividend. Both of these lead to wealth creation. I also covered how to do simple stock picking through fundamental analysis, such as compute financial ratio, look at company's prospectus. And last but not least, I had also shared chart pattern analysis, such as the flag pattern and head and shoulder pattern, which is under technical analysis, and how you can use them to spot continuation trend and reversal trend. Okay, before I end this presentation, is there any questions? You can type the questions into the chat box and I will answer it. Alright, I'll give you guys a few moments to type your questions. Okay, so far I just saw one question, which is, oh, someone have to catch a flight. All right. Okay. Yes. Yes, we'll upload this. Yeah, this will be recorded and we'll upload this in our YouTube channel, Philip Capital Remember Heart Letter. Okay. Is there any other question? Don't don't be shy. Just ask any question. Okay, I think there's no question from the floor. All right, so before I end this presentation, uh, yeah, I will show you our online account opening QR for those who have missed just now. So feel free to take a picture of it again and scan it later to open an account with us. Yeah, I'll pause here for a few seconds for you guys to take a picture. Okay, to contact us. So if you haven't followed our social media, please do so to keep yourself updated with our events and news. You can follow us on Facebook, subscribe to our YouTube channel, follow our TikTok, or join our Telegram group. Later I will show in the other side. Or follow our LinkedIn. If you want to Google us, also can. You can Google us at your browser, philip.com.my. Okay, here is the Telegram QR code. Feel free to join the Telegram QR, the Telegram channels, Philip Capital Stock and Philip Capital Futures and CFD. All right, sorry. I saw a question. All right, so before I explain this Telegram channel, so would you be able to explain more why flagpole is bullish? Okay, let me go back to the slide. Hold on. All right. There are two type of flag. There are two type of flag though. Hold on. Let me. Okay. So the flag. Let's say the bullish flag here. Okay, the bullish flag. You ask, will you explain more why flagpole is bullish? Okay, the flag pattern. Let's say for the bullish continuation pattern, the flagpole, it means that there's a increase of buyers. You can see here in chart, you can see here the one arrow. There are strong buyers right now. The green candle means that yes, the buyers are coming in, which indicates that price are likely to go higher. But before it continue higher, price won't just go straight up. They still have to come down a bit before continuing up, where we call it the flag, the consolidation phase. And we just have to wait for, yeah, now we just have to wait for confirmation whether or not the flag, the pattern is valid and continue to push higher. Like I mentioned just now, the confirmation for this is a bullish green candle like this. If we saw this candle, the bullish green candle, that is strong bullish candle, will is a higher probability that buyers are coming in again and will continue to push the stock price higher. I hope that answers your question. Okay, but for if let's say in this case it's a bullish green candle, let's say if it close is a red candle, a rectangle, it means that the flag pattern is not valid yet. It means that it's lower probability that the price will continue to trend higher. So that's why we always have to wait for confirmation before entering a trade. In this case, for the bullish flag example, we want to wait for a bullish green close above the flag. All right. Okay. Is there any other question that you guys want to ask about technical analysis? All right. Okay. I will pause here another few more seconds to wait for another question. All right. So if there's no question, let me go back to the Telegram group channel QR. Yeah, here you can join. Yeah, just join. You can join them for free. And for Philip Capital stocks, we will mostly share updates and recaps. Okay, there's another question. Can you repeat who are preferred shareholders? All right. Preferred shareholders are the one that hold the preferred stocks. So let's say if you own a preferred stock, you are a preferred stock. You are preferred shareholders as well. So for preferred, so let's say you own a preferred stocks. Yeah, you have features like you have fixed dividend. That's one of their features, and yeah, you have no voting rights. Compare if you are common stockholders. So let's say if you own a common stock, you are common stockholders. If you own a preferred stock, you are preferred stockholders. If you own both, then you are considered both stockholders actually. I hope that answers your question. Okay, so as I explained just now, there are two types of stocks. There are two types of stocks. One is common stock, and the other one is preferred stock. So let's say if you own a preferred stock, you are a preferred stockholder, where you have no voting rights. However, you receive fixed dividend. Who can be who can be preferred stockholders? Okay, who can be preferred stockholders? You'll be individual investor, institution or companies that purchase preferred stock that is issued by a corporation actually. Yeah. If let's say the corporation offer the preferred stock means to the market means you can own them actually. Okay, however, time is short actually. I hope I can continue this longer. Yeah, so let me continue with the Telegram channel first. So yeah, so our Philip Capital stocks regarding this, we will share updates on we share any updates and recaps on latest market movement as well as news release for companies in focus. For Philip Capital Futures and CFD Telegram group, we will show market views for major indices, commodities, and currencies. And of course, we will share the latest updates on market fundamental. Okay, so this is our coaching branch contact. Feel free to drop an email or call us if you have any inquiries. Or if you're in Kuching, you want to drop by our branch to ask us anything. Here's the address. You can take a picture of this as well. All right. I thank you so much for everyone paying attention to my presentation. And this is the end of the presentation. Yes, and thank you so much for attending. I'll see you guys in the next one. All right. Thank you. All right. Good night, everyone.